Good morning, I'm Donnie DeLange and I'm going to take you through the main highlights of Supergroup's interim results. Supergroup is a leading transport, logistics and mobility group that includes supply chain, dealerships as well as fleet solutions. The next graph just illustrates the forward PE discount compared to the industrial transport index. We feel the share offers value on an absolute and relative basis, given that the share is trading at a PE of around 11.3 times and 1.5 times its net asset value. An important point to note is that the group has a 55.3% stake in SG Fleet, which is listed on the Australian Stock Exchange and is worth around 1,328 cents per Supergroup share. The performance of the South African logistics and transport industry is closely linked to the prevailing state of the economy. The logistics industry remains competitive, which continues to place pressure on operating margins, which highlights the importance of strict cost controls. While volumes are likely to remain under pressure in the short term, the medium-term outlook seems positive. Just a few key highlights from their financial results. The group continued to experience challenging trading conditions with high levels of competition across most of the group's operations. Following a 2-year period of concluding strategic acquisitions, Supergroup's results reflect the geographical diversity, with the offshore operations having contributed 46% of revenue and 62% of operating profit. The group's revenue increased by 27%, mainly driven by a strong performance from the SG Coal and the inclusion of newly acquired businesses such as the SMC dealership in the UK, SG Intime's acquisition of an 88% interest in the Spanish courier company Adair, and revenue also increased as a result of the inclusion of the Essex Auto Group and the Western Cape dealerships for the full period. The adjusted operating profit was up by 10%, resulting in a lower operating margin of 6.8% versus the 7.9% in the previous year. The diluted core headline earnings per share was up 7% to 172 cents per share. An important thing to note is that this excludes amortization of property, plant and equipment, intangibles arising from business combinations, as well as the costs related to acquisitions and BEE costs. Now taking a look at divisions, the SG Fleet divisions had the biggest contribution to operating profit with a contribution of 43%. SG Fleet reported a good set of results and benefited from the inclusion of Motiva UK for the full period compared to the 1 month in the previous period. The margins decreased as a result of the lower Motiva UK and Fleet higher margin businesses. Then the Supply Chain Africa division contributed 26% to operating profit. Their results were largely impacted by the weak consumer demand experienced in the fast-moving consumer goods and quick service restaurant industries. Then the Dealership SA division contributed 50% to operating profit. They reported a good set of results, comfortably outperforming NAAMSA statistics. The Dealership SA new vehicle sales were up by 7.9% versus the 2.3% of NAAMSA, and the used vehicle sales up 10.5%. Now looking at the company's prospects, the European and UK market seems to be stabilizing, but regardless of recent political developments in South Africa, the trading environment is probably going to remain challenging, and management indicated that they remain cautiously optimistic. Supergroup has a capped SWIX weighting of 0.3%, and we upgraded our recommendation from neutral to overweight, and we would recommend portfolio exposure of up to 3.38%. Thank you very much. Please take note of the following disclaimer, and if you wish to place a trade, please contact the trading desk. Thank you very much.